Welcome back, everybody. Today, I want to clarify the first bounce trade, and I hope after this video presentation, it will be more clear as to what the first bounce trade is and how you can actually trade it in lifetime in the charts. I know from the video that was done before, there were some questions, so I'm also hoping that this video will assist with clarification of the concepts, right? So let's start. So what is the first bounce trade? It is basically the follow through after an explosive news catalyst event. Stacy Burke would say that you're basically to wait for the first 15 minutes after the news for that candle to close before you start looking for the first bounce trade. And in my back testing, I found that to be quite accurate. So you want to, when you have a first bounce trade set up, you want to be sure that, again, the news event is explosive. It's not teetering around or hanging around, or you're having a full blow through of price during and even after the event. You want to also have a setup in mind. So most times the news event will coincide with a setup that would have been setting up from before the news itself, and the news would have been a catalyst to continue that move. So that would add to it being a good trade setup and something to actually look to trade. Another thing would be to, I know some persons in terms of interpretation of this strategy, they trade the first bar, which is the first bar that comes after the close of the news candle. I've found that that is not necessarily how price tends to play out. I think majority of the times, I think the way I'm going to show it to you will actually play out more often than a first bar trade. So we're going to look at the 15-minute chart, and of course, in taking the entry, we expect that we're going to take it on a lower time frame, a 5-minute or 1-minute time frame. But I believe after explaining this, there will be a better understanding of how to go about taking this trade. So what I'm going to do, I'm going to go to the chart and just explain the examples from there. You see here. All right, so what I did was I went back all the way to the 1st of August. I wanted to show you quite a few examples just to nail it home as to how to go about taking the first bounce trade and to erase any doubts or any misunderstandings that there might have been. All right, so let me go back. This is the 1st of August. Just blow this up a bit. If I can find my tools, I've shifted. Here we go. Right. So we have this news event which occurred at 9:10 a.m. on the 1st of August. It's quite obvious this is a news event based on the size of the candle and even the size of the wick of that candle. So the news event has happened, the candle has closed. What we're looking for next is a continuation of that move for coming out of where the direction that the move from the news has happened. And so we have price continuing to fall. This was a very big bearish candle, long rejection wick. Price continues in that direction after the news. But what we're looking for is the first pullback after the news. And so we would have seen that first pullback happen here, which is what this arrow denotes. This arrow denotes the news candle. And after this pullback, we're going to look for another candle after this to show us some confirmation that price is actually failing to go in the opposite direction from the direction that the news had gone in. And so we have this doji here, and then we had this engulfment. I don't think there was much follow through on this news event for us to have would have gotten say at least 50 pips from this trade. The most that probably would have been gotten is about 20 or less than 20 pips. Still, there would have been some trade. A trade from here to here is about 25 pips. Still something to. But the idea is you're going to look for that news candle to close. 15 minutes after that, you're looking for either the pullback or price is going to continue as you see it here. You're going to get that first bounce, which is this candle, and then you're looking for the entry on the candle afterwards. So let's go to the next one and see how that plays out. All right, so the news event was this bearish candle at 8:30, I believe, yes. So we had the pullback, which is the first bounce here, and then we had a candle that engulfed the body of this doji. Any entry after this is good. Yes, price went back up to the 50 round number level. You really would not have known that, so entering even after the engulfment, probably at the open of this candle, would have been a good entry if you were patient enough to wait for price to continue to show its hand and gotten this entry. This would have been the best entry on this day. Would have gotten over 100 pips on that trade. This day would have been a little bit tricky, if not a lot tricky. We had two news events on this day. I think we had a 9 o'clock and a 8:30, and then a 9 o'clock news event. But if we look at it as it is, we have price going up during the news event. We would have been looking for that first bounce, which is the first pullback after the news event, and would have gotten that here. But then after that, because we would have had to wait for this candle to close, then after that, we would have gotten another news event, which would have kind of negated this news event in terms of looking for an entry. We had a continuation in the same direction, but yes, price pulled back again, but then price continued all the way back up here. This would not have been a best trade setup in my mind. This is choppy price action. So the fact that you did not get a clear setup such as this, where you had the news, the bounce, the engulfment, or if you had an inside bar here, the next bar would have been the trade. I'm sure there are examples coming up of the inside bar. So let me show you that. All right, so we had this news event at, what time was this? 8:30. We had the pullback, which is the first bounce. And then this candle was engulfed here. So you're looking for an entry at the lowest point or at the nearest round number that would have given you the best entry on a lower time frame. You'd look for your lower time frame confirmations instead of this candle, and that would have been the trade for at least 50 pips. So the the news candle, the first bounce, the engulfment is a clear sign of price continuing up, and the next candle would have been the entry. There was no news on that day. Either here. So the next news day was on the 10th. This was the news candle, a really large doji candle. There was no clear direction, obviously, with this candle. So I've had to wait either for, I think this was a 9:30 open, New York open. Well, this was 9 o'clock. New York open engulfed this entire structure here. Clear sign of downward movement. And this pullback here would have been a great entry after this news event. Another thing that you can use a confluence to is remembering the levels of rise or fall before the session that we're trading in. So in this case, would have had 1, two, three levels of rise already heading into New York. So basically, we're looking for a pump and a dump setup in this case. And that's exactly what played out. As I had said, the news can be a catalyst for the best trade setup that you have in mind, or based on whatever signal day you would have gotten the day before, etc., or whatever day there is in the cycle. That those can be used as confluence to know what direction to take the trade in after the news too. Because there are going to be times when the news will go in one direction and then price will reverse and go in the other direction. So something like this would have assisted with coming up with a thesis as to which direction to take the trade in after this news event. We had this news event on at 8:30, clear pin bar engulfment at 0 level. And then we had this bounce. There could have been a trade in here even on a lower time frame. So we had the bounce. We had this bar. We didn't engulf the candle that retested this level. And any one of these could have been an entry based on what confirmations are given on the lower time frame, and probably at least 30 to maybe 40 pips out of this trade. All right, so here's another news event that may be tricky based on all the weeks that are coming out of the news, either coming or after the news. So we have this 8:30 news event, and price gave obviously went down, came back up, closed as a very long rejection wick, and we had this retest. This could have been an inducement, but again, looking at what happened before the session, the high of the day was here, so we had 1, 2, 3 levels of drop. Had a 50 pip stop hunt in this week here, and then price went right back up. In my mind, this would have been an indication of bullish movement, but of course, we always need confirmation. So I'd wait to see what the New York Open would have brought, or if it's not in the second hour, what the third hour would have brought in terms of confirmation for the trade to continue. All right, let's see if we find another example. We have this news event. I think this is 8:30. So we have bearish movement. We had this pullback, which was a doji. But what would have negated this trade? The doji, even though it's a pullback, would have been looking for either another bearish candle or a bearish candle coming after this doji to show our price is going to continue in the direction of the news event, or an inside bar, which would show that a retest to this high is not holding. But with the next candle going this way, that would have negated the trade after this. So remember, we're looking for the news bar, we're looking for the pullback, we're looking for the next candle to confirm the trade in terms of it being an engulfment or an inside bar, and then we would know if the trade is valid after that. With this trade this candle would have negated the trade idea of continuing to go short until we would have gotten this engulfment here, even here that engulfs this entire structure, engulfs the news candle. The next opportunity for the trade would have been here at the 50 level, I believe it is, yes. This is one of those tricky days again where we had 9:45 news event, bearish movement, and again, if I'm realizing in hindsight, having not said it before, another thing to look for too, as I said before, to help with confluence for the trade is to look for the levels of rise. We had 3 levels of 50 going up. That would have been very good confidence to look out for the pump and the dump. on this day. Bearish, continuing bearish after the news. We had a pullback. We basically had an inside bar here. My thesis after this would be looking for an entry at the open of this candle here, and for the continuation of the move down. Would have gotten consolidation for another 45 minutes or so. But even so, I think most of that trade would have happened outside of the 12 candle window, this time period. But the trade would have been confirmed inside of the window. So still a good trade. All right, here was another news event at 8:30. So we're with the news event going bearish, we're looking for the pullback and the continuation. In this case, what would have negated the trade as a continuation would have been, yes, we got the pullback. Yes, we kind of got an inside bar, but then after that, we would have could have probably taken the trade actually. So it would not have been the better trade of based on the fact that price would have gone in the other direction about another 100 pips after that. But still, if we're looking for 25 to 50 pips after the news, then this could have been a trade. The retest of the open and the continuation down. News event taking us to the 0 level. And then after that, we had this huge engulfment candle, which would have negated us even thinking of continuing in the upward direction. The entry after this engulfment, in my mind, would have been fine, and we would have gotten at least 50 pips out of that. I hope you're seeing the picture, and I hope it's becoming more clear as to what can assist you with trading after the news. Just using the simple confirmation of waiting for the news candle to close, waiting for the next 15-minute candle to close, which would either be the retest, which is the first bounce, or it can be a continuation candle in the same direction, but you're still waiting for that first bounce. So that is the candle that is a pullback. You're waiting for either an inside bar or an engulfment in the direction of the news, and then you can take the trade on the next candle. So if not, if no engulfment, no inside bar, and price is closing above the retest candle, then you would still have to wait to see what kind of hand price is playing out at that particular time to confirm the trade. But that's the basic idea. We had this news candle, we had a continuation, we had the first bounce, we had an inside bar, next candle at the lowest point is a trade for at least 50 pips there. And we had this huge candle, which is good to show that there's a lot of momentum. And we had the first bounce, and we had basically a very huge candle that basically engulfed the candle that retested after the news. If you're looking for the best fill would have been at this 50 line. If not, following the rules that I've made up, I would be looking for an entry. I'd have actually been looking for an entry up here, but if I missed that, and waited, and it got to the 50, I would have taken the trade there. That's another 50 pips of that news event. We had this news event. This video is getting long, but I really want to drive home the point of what to look for after the news. And I hope this is quite clear after this. The news event, we had a huge week afterwards. We're still looking to see if we're going to get that first bounce trade. In this case, we get a retest, but then we continue to get consecutive bearish candles, which eventually close below the news candle. I would be looking for my trade after that. At least 50 to 75 to 100 pips would have been on the cards to take after that event. And again, we have 1, 2, 3 levels of rise into the high. the high of the previous week. Uh, that would have been the confirmation or the added confluence to take the trade for a short. And we're up to the current day. I hope this clarifies what the first bounce trade is about. It's basically a low-hanging fruit. It's a continuation trade. But if not, you have to be versatile enough to see and to be patient and to wait for the market to show its hand, just in case the news catalyst event is a trap and it's taking you into a high or into a low to trap you there into thinking it's a continuation trade. You have to have that versatility and to be able to think while looking at the price action after the news event to say, all right, what are the confirmations I'm looking for? If this doesn't happen, then I do that. And if this happens, then I do that. So if and then. So be logical about the steps, be logical about the way you think in terms of taking the trade. Await the confirmations. Don't get trigger happy, I would say. And uh, just be calm in terms of taking the trade. I mean, it's if you understand what a continuation trade looks like, it shouldn't be hard. But with the added confirmation, such as the inside bar, the engulfment, you're waiting for the retest, and then that inside bar or engulfment candle in the direction of the news, you're good to go. You're on a volatile pair such as gold, you're most likely going to be getting that 50 pip trade after the news event. Thanks for staying tuned. I'm coming with more videos in terms of the timings, building your thesis for the day, and what else? I have more topics that I'm going to be posting videos on, and they'll be coming shortly. All right, stay tuned and take care. Bye-bye.